Traders at Axis Bank say the 2027 and 2029 bonds are the most sought instruments, trading at a high of 18.85% and 19.3% each. On the T-bill side, on the underrun one-year maturity and the 25th September 2025 bill are the most actively traded instruments, dealing at an average of 19.3% and 18% each. Anthony Aigbokhan, Treasury Team Member at Axis Bank, joins me now for more market movements. Anthony, thank you for joining us today.
Thank you. Good afternoon.
Right. Let's get right to it. Let's start with you bringing us up to speed on the market trading action so far. Let's start with market liquidity levels and the money market.
Okay. Thank you very much for having me. So I'll start with the money market updates. We saw market liquidity improve. Market liquidity improved by 57 billion naira day on day to close at a report of 50 billion naira. This is a significant improvement from where we started the week at. This improvement could be attributed to the NTB maturity that we saw, over 1 trillion that matured into the system. So based on this, we've seen the OPR and overnight rates decline significantly, currently close at 16% and 26%, and 27.1% respectively.
Right. As you know, it's the last trading day for the week and trading day for the month and also for the quarter, the first quarter. We're heading into the second quarter. And talk to us about, let's start with the bond market, the yield curve, where the yield curve is now and where it was, just trends we've seen or you've seen in the last, in this first quarter.
Okay, so in the bond market, what we saw at the beginning of the quarter, we saw rates at elevated levels. We saw the on-the-run papers were trading at an average of 22%. However, in the month of February, after we saw the inflation rebasing effect, where it reduced, we saw the rates beginning to decline. So we saw a decline on the bonds space across the curve. We saw the rates decline significantly. But however, we also saw that this decline kind of led to a bit of activity from the foreign portfolio investors who started selling their bonds to repatriate their dollars, seeing that maybe they were not very comfortable where that rate was. So we saw the rates begin to inch up slightly. There was a bond auction that was done this week where the DMO offered 300 billion across the 2029 and the 2033. The total that was sold was 270 billion, which was where it was undersold. We saw the rates at the 2029 close at 19%, and also the 2033 close at 19.99%. This more or less for this quarter indicates that the DMO is a bit comfortable with rates not exceeding 20%, but also showed that they may not want to reduce the rates too much so that they don't spook the foreign portfolio investors who are coming to invest, so that we don't see that buying pressures in the Nigerian FM foreign exchange market.
Right, and perhaps let's quickly talk about, you mentioned inflation, let's quickly talk about inflation. What is your outlook for the market's expectation and outlook for inflation going forward?
Okay, for inflation, the market is expecting a decline in inflation. We saw how the impact of the rebasing had on the inflation numbers, where we saw that decline to 24%, and then the last inflation, which also declined again to 23%. So going into the new quarter, we still expect to see this downward revision of the inflation numbers. We also expect the MPC to cut rates at its next MPC auction, which is going to be held in May. So we expect to still see this continuous decline in inflation and also in the rates across the fixed income markets.
And for the bond Q2 bond calendar, as you know, I mean, we have a much bigger budget, 2025, compared to previous years, and we're going to see more borrowing. But talk to us about what we should or can expect from the DMO.
Yes, okay. So just as I said, I think the DMO is a bit comfortable in keeping rates at slightly below 2%. So at this next bond auction, we expect to see rates still hover around where the previous auction closed. probably around the range of the 19.9%, and maybe just those high rates that we saw at the beginning of the year, where rates were at 22%. We expect rates to hover around 19%.
Right. What is to be said also for this quarter about the exchange rate? We did see it hold quite steady for some time at 1,500 levels. But we've seen that inch up a little bit. But talk to us about the trends and if we can expect this to continue, what we can expect in Q2.
Okay, I'll start with the trends. So the Nigerian foreign exchange market has seen a bit of calm in terms of the rates. We've seen rates hover around 1520 to 1530, 1540 levels. Yesterday we saw the CBN closing rate at 1540. So we still expect this calmness. We still expect the volatility to still be reduced in the Nigerian foreign exchange market. We've seen that the CBN has been very, very active. They have been participating in the market, selling dollars, trying to ensure that we don't see that much of a depreciation as we saw last year. So we still expect this intervention by the CBN to continue, although we are a bit wary about looking at how the foreign reserves has declined over the period. So we saw over the quarter, we've seen the foreign reserve decline significantly from the 40 billion level where it was to where it is now, which is currently at 38 billion level. So this more or less kind of shows that the war chest of the central bank to defend the naira is declining. So we expect the CBN to still come up with more innovative products and more innovative things that will come into the market to improve the Nigerian foreign exchange market, which they have done. We still expect the volatility in the foreign exchange market to remain calm, and we expect rates, however, based on where we don't think there may be enough based on where the reserves is at for the CBN to continue to intervene in that high pressure as they had done this quarter. So we expect to see a slight depreciation of the naira against the US dollar to around 1550, 5040 levels.
Right, and finally, going into the new week, which starts, I believe, on Tuesday or is it Wednesday. Talk to us about what you're expecting in terms of liquidity levels for the market.
Going into the week, we still expect the market to still be a bit liquid. Next week, there is an OMO maturity of over 600 billion coming to the market. This can also improve the liquidity in the system. So barring any significant activities like maybe another OMO auction or maybe like another NTB surprise auction like they did this last week or so. So buying any of those, we still expect market to be a bit liquid going into the week, but we still know that the CBN is very interested in still keeping the tight monetary policy in effect in Nigeria. So right. We still expect them to reduce the liquidity as the month goes by.
All right, Anthony, thank you for sharing those insights with us. We appreciate your time on the show today. Anthony Aigbokhan, Treasury Team Member at Access Bank.